It's an arduous task to put an inventory together. And what most homeowners will do, not all of them, but most of them, is they'll go through the house and it's half burned or it's all burned or whatever, and they'll go through and they'll go, okay, well, we got the living room couch, we've got the TV, we've got the computer, we've got our bed, we've got, these big things. And so they'll turn that list into the insurance company and say, we'll get to the little stuff later, but let's just get this stuff over to the insurance company. Well, with the way insurance works, as you all know, if you don't put it down on paper and submit it, you're not going to get any money for it. And what happens is later never comes. People get busy. They're moving on with their lives. They're getting into another house. They're doing all these things. And these things aren't being calculated. What we do is we bring an inventory team out, and we have some benefit because we've been there so many times. We know what's in most homes. So we're able to ask questions. Well, I don't see a broom here. Did you have a broom? Well, of course I had a broom. Well, if you had a broom, you probably had a bucket. If you had a bucket, you probably had a mop. So A leads to B and so forth. And so we're able to compile a list. And when we put an inventory together, it's down to everything. Postage stamps, pencils, paper clips, spices. Every single little thing that was in that house, or as close as we can get, gets put on paper. And then we help them price it. Rather than people have a tendency to undervalue their own and say, well, what did we pay for that? I don't know, it was like $500. No, we put real prices, defendable prices, and then we do an aging and conditioning report. As all of you probably know, even though you have replacement cost coverage, most homeowners' policies only pay you the actual cash value or the used value of your stuff until you replace it. And some people say, well, I have replacement costs, so it doesn't really matter. Well, it does matter, because if you've been in a home for a long time, you may have 50 bath towels. And if you have a fire, you're probably not going to go out and buy 50 bath towels again. Maybe you'll buy 15 or 20 bath towels. And that makes the cash value of the rest of those towels pretty important. So we do, the insurance companies prefer to just depreciate things by how many years old they are. But we found that that's not a good tactic, and there's a better way to do it. And what we do is aging and conditioning. For example, if you have a living room, I have a living room and I have a family room. I have a couch in each. My living room couch, nobody's ever on. It's just there. It's like a showpiece. It's like a decoration. It'll last forever unless my wife decides to redecorate again, which she probably will. But it would last forever. My family room, on the other hand, I got kids jumping up and down. I got a dog bar. I got people eating pizza. People are going crazy. It's a madhouse in my family room all the time. I'm on the computer trying to find a business trip to get out of there. I mean, there's a lot going on. And so my couch in my family room shouldn't last as long as my couch in the living room. So this is the right way to develop how your client should be looking at their stuff. And then sometimes we have to help school the insurance companies. I don't usually give insurance company name when I give examples, but I think in this room it might be kind of fun. We handled a claim that happened to be insured by State Farm. Anybody love State Farm in here? Probably not. So this will be fun. So nice family, modest home, Kathy Grizel and her family. We did the inventory. We submitted it to State Farm. State Farm sent us a really nice letter. They sent us a really nice letter, and they said, we are so sorry about the family heirloom necklace that you had, and we recognize that it is worth $8,500. We wish we could do more. And it really sounded something like this, by the way. We wish we could do more. Unfortunately, your policy restricts you to $2,500 for jewelry. So we're giving you the $2,500, and sincerely, blah, 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 blah. And I said, oh, okay. So we wrote a letter back to State Farm. Dear State Farm, thank you for the $2,500. Attached is a copy of your insurance policy where it says $2,500 limitation by the peril of theft. Fortunately, in this circumstance, we had a fire. So we'd like to go ahead and tender the rest of the money for the payment. So these are the kind of things that we deal with where sometimes we have to help the insurance company adjusters understand their own policies. So there's a little State Farm example for you guys might like. We're also dealing a lot with replacement costs, and now we're getting into functional replacement costs. I don't know if all of you know what functional replacement cost is and how it's different from replacement costs. That's brought a lot of interesting questions to the table. And then we get into things like if you've got a water loss in your living room and you got a 1947 home and the carpet's damaged, the insurance company comes out and they say, yeah, we'll get you some new carpets, new pad, we'll fix the subfloor because it's buckling under there and you're good to go. And we say, well, wait a minute. They had hardwood floors. Even though they weren't using them, it's part of the value of the home. They could always rip that carpet out and use those hardwood floors. Or if they sold the house, that could be part of the value of the home. So we need to replace it with hardwood floors. So we get into some questions like that.